What's going on? Let's get into it. So pick any pair you want, doesn't matter. Go to the 1 minute. This is a good exercise for you to practice. Add an MACD. I talk about the MACD a lot. It is so helpful for so many different reasons, and I'm gonna get into one of those reasons today. Add an MACD. What are you gonna do? Well, you are going to mark out the very first candle of the red MACD. Mark out the top of it. All right, I'm gonna mark out the top of this one, mark out the top of this one. Okay, so actually we're just gonna start with one at a time. The strategy is pretty simple. Every time that price breaks this first red candle on the MACD, price will continue higher after. But before that happens, price tends to pull back to the last bit of consolidation before price breaks. So price broke here. This was the last chunk of consolidation. There's your entry. All right, we'll do it again. Here we go. Boom. This is the last candle here. This is the last bit of consolidation here before price broke that first red bar on the MACD. All right, this is where our entry will be. Cool. Enter right on there with your stops below. Look at that risk to reward ratio. Look at that risk to reward ratio. Incredible. We'll keep going. It's really simple. I already did that one. We do this here. Okay, cool. Boom. Price broke here. Last bit of consolidation was here. Enter there. Stops below. Boom. Easy. 1, 2, almost 2 risk to reward ratio. You decide your risk to reward. You decide where you're going to take profit. Just know that this happens, right? It's a very, very unique way to enter here. Cool. Price breaks here. Last bit of consolidation was this area here. Put it up a little bit actually. Look, price comes right down into that. There's your entry. There's your stop. Easy peasy. There is one major key that you need to know before you start trading this, and I'm going to get into that in a bit, but we're just going to look at a couple more examples. We'll just click on any random pair. Let's do, sure, odd CAD. All right, let's look at some examples. Okay, right away, what do we see here? We have red MACD, first candle. You mark out the consolidation here. For that, we never got an entry on, but that's okay. Continue to the next example. First candle here, price breaks there, pulls back to the consolidation, enter. It's just so simple. I don't know what else to say about it. It's just so easy. If you guys want to use the same broker as me, sign up with Hanko Trade. They offer up to 500 leverage and spreads as low as 0 pips. You can also open an account with as little as $10, which I find really neat. I personally trade with them. They're great. If you want to use them, the link will be down in the description below. Boom, price breaks. This is the only consolidation you have, so that's the lowest point it's going to go. As you can see, price just bounces along. Easy peasy, enter. Boom, once again here. Last bit of consolidation, breaks, enter. Here we go. Last bit of consolidation. You could say it was here, so you probably want to enter in that trade. Depends how you would enter yourself. But yeah, super simple, super easy. Now, I will get into when not to enter in a second. Last bit of consolidation here. Boom, enters there. Easy peasy. Now I'll tell you when not to enter. So something you need to realize when you're doing this is you only trade the reds when you're in an uptrend. We're gonna look at greens now. Greens is for when you're in a downtrend. So now with the green, it's gonna be the opposite. Mark the very first of the green. When price breaks below it, like right here, last bit of consolidation up here before the break, price comes in, enter. Same exact thing, but now we're in a downtrend. Here you go, there's the last candle, breaks, price comes up. Doesn't quite get to the last bit of consolidation, that's okay. So now we're in a downtrend, so we're doing the opposite. We're not gonna enter there because that's actually what we talk about for when not to take this. But yeah, so it's the exact opposite when you're trading a downtrend. You're just marking out the greens instead of the reds. So the key to trading like this is you need to know when you're in an uptrend and when you're in a downtrend. So what you can do is jump to the higher time frame, like the 15 minute, and you need to look for when you're having these pulses up. So for example, you are in an uptrend here because look, if you mark out this MACD from this side, to the end of this MACD here, this would be an uptrend. This whole chunk here is an uptrend. Now, from this red to that red, you're in a downtrend. So, this red to this red, downtrend, this green to this green, you're in an uptrend. Right, so you need to be paying attention to the higher time frame MACD to realize if you're in a downtrend or uptrend. So this is up, this is down, this is down. So within this downtrend on the 15-minute, this is where we can go to the 1 minute and we can look for the greens to be broken. That is when we're looking for the greens to be broken. So this is our last green here. Price breaks, continues down. Same thing here. There we go. Price breaks, comes back up, continues down. It's just the same thing over and over. It's really easy to see. Same thing. There we go. There's one there. Price breaks, and will most likely continue downward. This was the last bit of consolidation here. Price comes right back up into it. Here are the MACD inputs that I have. It's all just default. I just changed the colors around. Take off the MACD and the signal. Just leave the histogram on. This helps you determine these bars to use. The MACD I use is just called moving average convergence divergence. Just search up MACD and you'll find it. But yeah, that's gonna be it. Really simple, really fast. This is just a trick that I use as I'm trading. If I want to have a more optimal entry on some of my trades, I'll actually wait for some of these zones to get broken, and it works out perfect. So yeah, that's it.